Hey, yo, check this out. This might be the most historic buying opportunity for Bitcoin, and many people don't even realize it. This might be the time to start paying attention to what's going on in the crypto market, not only for Bitcoin, but for altcoins as well. It's your boy Dre La Soul, here with some more crypto news and crypto wisdom for your head top. Here's another episode about Crypto Rants. And this episode, we're going to dive into why this might be the best opportunity for buying Bitcoin, because BlackRock is talking about Bitcoin.
If you look at Bitcoin fundamentally on a long-term basis, it really seems like an asset that should be uncorrelated or even inversely correlated against certain risk factors that exist, right? What's interesting is some of what we've seen lately seems to be self-fulfilling. When you think about what it is, it's a global, scarce, non-sovereign, decentralized asset. It exists outside of any one country's economic, political, or monetary system. And so that fundamentally, we think is what the long term is. That's why people think of it like digital gold. But you see this short-term trading correlation, and it can be a little bit self-fulfilling, at least in the short term, where before people would focus on, okay, well, higher rates, that's going to hurt Bitcoin the same way it hurts, equities. That makes some fundamental sense. But now it's been extrapolated to things that don't really make any sense at all. Tariffs, it's not clear that tariffs are any fundamental bad for Bitcoin. Economic fears. I don't know if we have a recession or not, but a recession would be a big catalyst for Bitcoin.
And if BlackRock is talking, everybody listens. Y'all might not want to listen to me, but if BlackRock is talking, y'all definitely going to listen. So we're going to play some clips from some of the experts in this space that also believe that this is the most historic buying opportunity for Bitcoin. So tap in. Make sure you like, subscribe, share, tell a friend to tell a friend. It's your boy Dre La Soul here with some more crypto rants for your head top. So BlackRock's head of digital assets, Robert Mitchnick, just revealed exactly what he believes is to come next for Bitcoin in 2025 as BlackRock continues to get more involved in this space. Again, BlackRock manages trillions and trillions of dollars. They are one of the biggest, or maybe the biggest, asset manager in America and in the world.
There are a lot of different reasons that people buy and hold Bitcoin. But as you also know, it's frequently referred to as digital gold, right? A store of value. Here we are in a period of time where people are feeling nervous about the economy, and it's not performing like gold. Gold is performing like gold. People are buying gold, but they're not buying Bitcoin. Can you help explain what's going on there?
Yeah, I think it's a fascinating thing, Julie. What we've seen is, if you look at Bitcoin fundamentally on a long-term basis, it really seems like an asset that should be uncorrelated or even inversely correlated against certain risk factors that exist, right? But there are periods where it does have these short-term correlation spikes. And what's interesting is some of what we've seen lately seems to be self-fulfilling and actually a self-inflicted wound by some of the research and commentary that the industry does, leaning into this idea of it as a risk-on asset at times, which really doesn't make a lot of fundamental sense. When you think about what it is, it's a global, scarce, non-sovereign, decentralized asset that exists outside of any one country's economic, political, or monetary system. And so that fundamentally, we think is what the long term is. That's why people think of it like digital gold. But you see this short-term trading correlation, and it can be a little bit self-fulfilling, at least in the short term, where before people would focus on, okay, well, higher rates, that's going to hurt Bitcoin the same way it hurts, equities. That makes some fundamental sense. But now it's been extrapolated to things that don't really make any sense at all. Tariffs, it's not clear that tariffs are any fundamental bad for Bitcoin. Economic fears. I don't know if we have a recession or not, but a recession would be a big catalyst for Bitcoin. And certainly the way the market seems to be commenting on it, doesn't reflect that.
Well, unless if people have less money, they have less money to buy Bitcoin, right? Or if there's the wealth effect of people having less money in the market in stocks, they have less money to buy Bitcoin.
Sure, and that's part of it on a short-term basis, but ultimately why I make that comment is Bitcoin is long liquidity in the system, right? It's catalyzed by more fiscal spending and debt and deficit accumulation. That happens in a recession. It's catalyzed by lower interest rates and monetary stimulus. That tends to happen in a recession. And it's catalyzed to some extent over just fears of general social disorder, right? And that, too, unfortunately, is something that can come up in a recession. So the market has almost, it seems, gotten this in some ways, not particularly well calibrated, but that's where the opportunity comes in for education in a market and an asset class that's still very nascent, right? And so we've been doing a lot of that in terms of education around our clients, helping them see through some of these conflicting narratives that seem to be out there.
Whether people are distracted by tariffs, celebrity gossip, and the so-called recession that they're talking about that's supposed to be on the way, or they just feel like they don't have enough money to invest in Bitcoin or even enough time to even understand and grasp what Bitcoin and blockchain really is, to even care to want to invest, right? Most people are worried about their day-to-day paychecks and how that's being affected by the government, right? Not so much the investment side, right? But I've been saying this for years. Now that crypto, is on the radar for institutions, on the radar for governments, it should be on your radar as well, right? But I'm pretty sure most people won't listen to me, right? But when BlackRock speaks, people listen. And honestly, even if that, is the case, some people still feel like that isn't enough for them to wake up to the greatest transfer of wealth. This is the greatest transfer of wealth that's happening right in front of our eyes, right under our noses, right? The transfer from, regular traditional finance to the digitization and revolution of blockchain technology mixed with AI, mixed with all the new technologies. Fintech is taking over the world, and we're stepping into the world of Web 3. No longer are we just in Web 2. So pay attention. Industry experts believe that, Bitcoin's price right now is a historic entry point. As all risk has been stripped, away, the price is on a 20% discount. And when I say the risk is stripped away, institutions are buying, governments are buying. So there's not much risk. We know that Wall Street is in it, right? So even though the price is down right now, eventually the price is going to pop back up. It's like trying to hold a beach ball under the water in a pool. If you try to hold it down, eventually it pops back up. The government is talking about it, and the biggest financial institutions in the world are selling it. BlackRock, Fidelity, not Vanguard yet, but some of the biggest in the world. So just listen to what Michael Saylor has to say. Listen to how he articulates things about Bitcoin, which the majority of the world doesn't really understand or can't really grasp.
This is kind of a historic entry point because all of the risk has been stripped off the asset. Like, you pretty much know Wall Street's going to embrace it, the U.S. government's going to embrace it, and banks in the U.S. going to embrace it, which means that all the other banks will embrace it. You already know all those things, and yet the market is really skittish based upon concerns about tariffs, the disposition of the U.S. economy, the interest rate forward graph. And so you see the interest rates have pulled in 30, 40, 50 basis points. And we're in this macro risk off zone. When that flips, I think Bitcoin will rip forward with a vengeance.
So in the short term, the biggest question right now is the economy going into a recession? What's up with the economy? Are we in a recession? Are we in a bear market? Are we in a bull market? Is tariffs going to mess everything up? Is inflation going to come down? Is interest rates going to get cut? Those are the questions. And the next question is, does Trump even care about what's happening to the market? But we have some optimism in regards to that and in regards to the bottom being in. So I believe that the bottom of the market is in, and some experts believe that the bottom of the market is in as well. So which means there's only one way from here, and that is up. Famous market expert Ed Yardeni says that he believes that the market is bottoming.
Asking ourselves as investors the question, does he care about the market? Does he not care? I thought he did. Well, maybe he doesn't. Are we going into a recession? I don't know. They haven't talked us out of it. Are they telegraphing us into one?
Yeah, it's pretty wild. I mean, you need a neck brace to deal with this environment. But all in all, it's kind of starting to feel to me like the market may be trying to bottom out here. Sentiment is extremely bearish. And typically when sentiment is this bearish, you make a bottom. But the reason you do that is that all the reasons for bearishness lead to a Fed put. And I think you asked, you mentioned that I might comment on the Fed here. And I think the Fed did, in fact, indicate that the Fed put is still very much available. It's on standby. The Fed said that, again, they're in no hurry to lower interest rates. They didn't say they're in no hurry to do anything. They didn't say they're in no hurry to raise rates. So I view their position as inherently dovish. They're looking to lower rates. And if we get into trouble, they'll do that. Maybe that will make the bottom. And maybe that'll be sometime in the spring. But meanwhile, my base case remains the same. I think the economy is going to prove to be remarkably resilient.
Also, Tom Lee, which is another famous guy that's all over CNBC, maybe every other week, believes that the market is bottoming as well.
Now let's bring in FundStrat's managing partner and head of research, Tom Lee, a CNBC contributor. It's good to have you.
Sounds like that we could actually have a positive case scenario with these tariffs, one that's either mutually agreed upon or if it's reciprocal, but maybe a good deal for businesses. And I think it would set the stage for a much bigger recovery rally than we expect.
Afterwards, right?
Yes,
I mean,
after.
the problem is the paralysis, if you will, between now and then. Like, what are we supposed to do over the next 10 days?
I mean, that's the dilemma, right? Because we still have 8 trading days till April 2nd. Most investors are getting just nauseous from the volatility, so they want to throw in the towel. But we also know that markets will bottom or have historically bottomed before the event actually happens. You know, the best example is the Cuban Missile Crisis, 1962. That was a 12-day crisis. The stock market bottomed 7 days into that crisis, recovered 2/3 of the losses before the resolution. So I think that's a decent template for today.
What about
Now, let's talk about the Fed put, because this is important. We got to explain what the Fed put is. What is the Fed put? So the Fed put is the idea when markets crash, the government or Federal Reserve steps in with money, whether through bailouts, stimulus, or printing more cash to prevent a total collapse. It's been the norm for over 25 years. Every administration, regardless of the party, has provided this safety net. Example, 2008 with the bailouts. Another example, the COVID stimulus. So why it may end. So if Trump wins a second term, some believe that he won't intervene as past presidents did, right? This could mean sharper, more painful market crashes with no guaranteed rescue. Now, the long-term impact, while tough at first, ending the Fed put could force a more self-sustaining economy. So an economy without the crutch of the government jumping in, potentially leading to an American renaissance. But the transition can be rough and has some very lasting effects. All right, so let's talk about what the Fed put means for our crypto strategy. So if the Fed put disappears, the market safety net vanishes, right? Meaning stocks and traditional assets could see more extreme crashes with no guaranteed bailout. So here's how this can impact, our crypto bags and some potential strategies. So crypto as a hedge. Without government intervention, investors may look to Bitcoin and other decentralized assets as a hedge against the market instability and fiat devaluation, which is the devaluation of the dollar. This strengthens crypto's case as digital gold. Increased volatility, of course, but if markets crash hard, crypto won't be immune, right? Expect sharp corrections, but in a world without bailout, smart money may rotate into Bitcoin and hard assets rather than relying on the Fed to fix things. So there will be a shift to true decentralization. So if trust in traditional finance systems erodes, decentralized finance, aka DeFi, could see massive growth as people look for alternatives outside of government-controlled markets, right? So the long-term accumulation strategy for this is if the economy undergoes a painful transition, dollar cost average, DCA, into Bitcoin and strong crypto projects. That could be a long-term win. Now, again, this is not financial advice, NFA, but as the financial systems restructures, crypto could emerge as stronger and an independent asset class. So again, if the Fed put truly disappears, we may see a financial reset where crypto plays a central role, but the transition could be brutal. trust and believe. So make sure you position accordingly, do your own research, have conviction in what you're invested in, because this is not financial advice. You heard? Now, if you're still in disbelief about the potential of cryptocurrency, listen to Shark Tank's very own Kevin O'Leary and what he has to say about cryptocurrency.
Remember, and I really believe this, within the next few years, crypto will be the 12th sector of the economy.
Now, in addition to that, gold is beginning to rally. Gold is reaching some new all-time highs, and it's time for digital gold to rally as well. Now, BlackRock is in the business of selling Bitcoin, and they're selling it hard, and they're doing a good job at selling it too, right? BlackRock understands what most retail or regular investors really don't understand. That we're about to see some sweeping regulation for Bitcoin and cryptocurrency, and clarity is about to be granted.
I was with a sovereign wealth fund during this week, and that was the conversation. Should we have a 2% allocation? Should we have a 5% allocation? If everybody adopted that conversation, it would be 500,000, 600,000, 700,000 per Bitcoin.
The very first bill is months away. The very first crypto bill is months away. The U.S. Senate is about to introduce a comprehensive stablecoin bill, and it's now called the Genius Bill. Then they're going to introduce a crypto structure bill as well. Now, there's also another bill on the table that's brewing and picking up some steam. And although it might not be in the immediate future, we can see this sooner than later. So the third bill on the list the third bill that's on the horizon is the bill presented by Senator Cynthia Lummis. So we're waiting for this bill to hit the Senate, to hit the House, and hopefully get passed, right? So this particular bill presented by Cynthia Lummis, this is where the U.S. will buy $1 million in Bitcoin over 5 years and hold it for 20 years.
In a way that provides authority by statute for the U.S. government to take gold certificates, which we hold them at about a 1974 value, which was, $46 an ounce or some such thing, and then bring them to market value and then use that to buy Bitcoin. If we did that, we could probably buy 200,000 Bitcoin every year for 5 years, hold them for 20 years, and not use a single new taxpayer dollar to do it. So, this is a very doable thing.
So again, we're witnessing a fantastic buying opportunity. This is time to front run the government, front run what's about to happen in the crypto markets. Now, if you don't believe that crypto is promising after all this, stay tuned for more, because we got more news, more crypto rants for your head top. But it's your boy Dre La Soul. Make sure you share, subscribe, like, tell a friend to tell a friend. And again, make sure you DYOR, do your own research. It's your boy. We out.
The reason for the call today, John, is something just came across my desk, John. It is perhaps the best thing I've seen in the last 6 months. If you have 60 seconds, I'd like to share the idea.